These are Nebraska corn farmers. They work in acres, not hours, harvesting the energy and climate solutions the world needs. We are proud to stand with you.
The success of tomorrow's soy industry depends on the actions we take today. The future is here, and the time to move is now.
Market Journal, Television for Agricultural Business Decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources in partnership with the Nebraska Rural Radio Association. Promotional support provided by the Nebraska Farmer magazine, and partial funding provided by the Nebraska Soybean Board and the Nebraska Corn Board.
Well, hi everyone, I'm Bryce, and thanks for joining us today here on Market Journal. As you can see, this is a special edition of Market Journal as our team broadcasts from the National Association of Farm Broadcasting Convention. Hope you enjoy the show, and we'll kick things off talking about the price of turkeys and that overall Thanksgiving meal. As we kick off our convention coverage here at the National Association of Farm Broadcasting, we wanted to talk about the price of the Thanksgiving meal. A lot of people celebrated Thanksgiving a couple of days ago. More celebrations will happen this weekend. So we brought on Faith Parham from the American Farm Bureau Federation. She's an economist to talk about the price of that Thanksgiving meal. You guys do an annual survey. You've got shoppers all across the nation report the prices in different regions nationwide. How do things look this year?
Yeah, so we have been doing the survey for 40 years. It's been the same baskets and the same goods for 40 years, and we asked volunteer shoppers in all 50 states plus Puerto Rico to check prices at their local grocery store and let us know what they're seeing. And so we're seeing a decrease this year of about 5%. The price for 10 people will be $55.18, and that's our third straight year of declines, which is a good news, right? We saw some record highs in 2022, and we've continued to decline, which means we're seeing some easing of those high food prices.
So some of those big ticket items that are decreasing, such as the turkey, or what would you say has brought us down this year?
Yeah, the turkey is our biggest decrease this year, and there's a few different reasons for that. One is most Americans eat frozen turkey for Thanksgiving, and so that means we have a little bit more price flexibility there. But also on the same side, turkey farmers are battling avian influenza, so we're seeing a lower turkey supply, and consumers are also just eating less turkey, so there's lower demand, and that's really keeping prices level.
Of course, in Nebraska, with a beef state, a lot of people eat prime rib on these holidays, so I know that is the case for some people as they choose. All right, wanted to bring you on as well because there's been a lot of things happening in the nation's capital where you're at with the American Farm Bureau Federation. Wanted to get up to speed. The Farm Bill was extended through the continuous resolution. What does that mean for farmers today?
Yeah, so we're in an interesting time with the Farm Bill. So this summer, they modernized a lot of those Farm Bill provisions through the One Big Beautiful Bill Act. Things like crop insurance, our safety net programs, ARC and PLC, and a variety of other programs. And those were extended the length of what a Farm Bill typically would be. But there was a few Farm Bill provisions that couldn't be handled in reconciliation. And so they've been left out, and so we still need a Farm Bill. In the continuing resolution, they went ahead and extended it, but we still need to see some modernization on those programs. That's things like loans for beginning farmers and ranchers, forestry titles for some of our western states, things like conservation programs. We're seeing, conservation programs that we've had since 2018. What are ways to modernize those and make them work for farmers and ranchers?
Historically, a farm bill is passed every few years, but we are gone past those days at this point. What's the outlook from Farm Bureau when it comes to passing a bill that impacts farmers and ranchers like the Farm Bill in this case? Is that something you think we're going to go back to the normalcy we've had in the past, or is this kind of the new norm, at least for the next couple of years?
We're hoping to see some normalcy return and get a full Farm Bill passed. A reminder, this is the 2018 Farm Bill, so it's been past due. So we really want to get back on a normal schedule. This is a bill that affects every American. Agriculture impacts us all, and so we really want to make sure we're advocating to our congressional leaders that we need a full Farm Bill and we need it in a regular interval schedule.
There's also a lot of questions about government payments, direct payments to farmers. The president was proposing that concept during the shutdown. We haven't heard a lot since the government has reopened. What are you hearing, though?
So for our farmers and ranchers, they all know that we're facing a struggling farm economy. And I mentioned, right, we got some more modernized programs that are really going to help us, but they don't come into effect until next year. And so we're all looking and thinking about how we can get farmers to next year. And one way is relief payments. And there's kind of two lanes on that. One is the farm economy is just generally in a downturn, so some relief on that front. And there's also been trade disruptions that have distorted the market and made it a little bit harder to sell our crops this year. And so ways the administration and congressional leaders can help provide that relief for farmers through payments.
Stay tuned, as they say. Lots of things happening in D.C. Faith, appreciate you joining us to break it all down.
Yeah, thanks so much for having me.
Faith Partum, economist of the American Farm Bureau Federation, joins us. If you'd like to learn more, keep up to date with everything going on at Farm Bureau, you can visit their website. It is simply fb.org. It's time for Crop Talk now here on Market Journal. Of course, going to be talking about crops and exports here in a second. But joining us is Reggie Strickland. He is a member of the U.S. Soybean Export Council Board of Directors. He's also a farmer from North Carolina. You grow some unique crops that those of us in Nebraska are not necessarily familiar with. Outside of corn and soybeans, what do you grow?
Yes, sir. We grow flue-cured tobacco, sweet potatoes, cucumbers that actually are turned into pickles, and also sweet corn. We also raise livestock, swine and turkeys.
That's fairly common for a North Carolina farm, is to have several different commodities like that?
Yes, sir. We're not blessed with the soils that they are in Illinois and Iowa and Indiana. We have real sandy soils, so that diversification is common in our part of the world.
It's many different crops. You have to have different pieces of machinery to be able to harvest your crops and plant them, etc.
Yeah, well, the planters are fairly similar.
Okay.
I mean, we use the same planter to plant cucumbers that we do corn and beans, or it's the same type of the planter. The tobacco and sweet potatoes are actually plants. The tobacco starts out as a seed in a greenhouse. So we have those plants that are transplanted into the field, and then the sweet potato comes from actually the potato itself. It's bedded in the soil and sprouts, and we actually hand cut those sprouts and transplant those in the field. There's a lot of hand labor involved in the tobacco, sweet potato, and cucumber crops.
It definitely looks a little different than the crops we grow in Nebraska. But I mentioned you do grow corn and soybeans as well. That's the reason we're talking, because you're a board member on the U.S. Soybean Export Council. We wanted to get an update of some of the work of the group, see what you guys have been up to, because there's been a lot of news on the trade front across the U.S., not just for soybeans, but everything. But specifically for your group, what have been some of the key projects the last 6 months?
Yes, I mean, we're looking to diversify our market and differentiate our U.S. soy versus other soy around the world and what's available, and just continue to build those relationships and look for outside markets outside of China.
How successful has the group been over the years in diversifying those trading partners?
Been tremendous. If you look at sales for this marketing year versus last, actually those sales are up over 40% versus last year. So we've had tremendous success building those relationships and building those markets.
In Nebraska, I believe the stat, at least it used to be, is 1 in 3 soybean rows is exported. Very heavily dependent on those exports. We get a year like this when exports would typically be flowing. That wasn't the case, so the markets obviously reacted. You're a farmer. You know the frustration firsthand when the prices aren't what you want them to be for the year. Talk about the wins, though, and how you are out there trying to find more exports for those soybeans and the importance of that work.
Yes, sir. I mean, there's nothing that beats that face-to-face meeting, and building those relationships around the world are very important, and USEC does a tremendous job allowing us as farmers to take a part in that, and how important it is for us to be there to share our story and what we're doing here as a U.S. farmer.
I'm sure it's important for you to be at some of those meetings, be face-to-face, shake those hands of those new trading partners, but you guys have staff doing a lot of that work to establishing the relationship in the first place. Is that a fair assumption?
Yeah, that is, but it is very important for the U.S. farmer or that farmer to be in the room, because people look at a farmer and just say, well, he's just a farmer from North Carolina. But when you get in that room in these parts of the world, you're more than just a farmer. I mean, you're actually the star of the show, because they want to talk to you and learn about what we're doing on the farm and hear your story, and no one can do that better than a U.S. farmer.
What excites you about USEC and the work going into 2026?
Yeah, just the opportunity that's there. There's still tremendous opportunity for us, and continue to share our story and talk about our product and the difference in our product and other products around the world, and the importance of including U.S. soy in their feed rations and things.
Reggie, it's been a pleasure to visit with you, learn about agriculture in North Carolina, along with the work of the U.S. Soybean Export Council. Again, Reggie Strickland is a board member for U.S. Soybean Export Council, also a farmer from North Carolina. As we continue our coverage here at the National Association of Farm Broadcasting Convention this week, in place of our typical market segment, we're going to look a little bit more big picture of the markets, what's going to happen with them in 2026. Joining us for that discussion is Senior Analyst for Terrain, Matt Erickson. Matt, it's good to see you. Thanks for making time for us.
Great to have me on.
All right, we'll get to that outlook everybody's waiting for 2026 in a second. But first, let's talk about input prices right now as you see them. The conversation around inflation, how big of a factor is that?
Well, it's big, and we've dealt with inflation now for several years, basically since 2021. And so I think the key theme here is persistent inflation and what producers and even consumers have gone through. You know, you think about the Fed's dual mandate and how this impacts interest rates. You know, you think about the Fed, having to, on the one side maximum employment, on the other side price stability. You know, those are competing forces right now. And we've seen 50 basis points worth of reductions in 2025, just on the fact that the balance of risk right now is with the job market kind of softening. And so for 2026, I believe price stability or inflation being at 3% right now, it's still relatively sticky, but that could be a challenge here as we do have some of these tailwinds for inflation.
When it comes to interest rates, what are you hearing for the projection to 2026? Continued cuts on that front?
Well, I think right now when we talk interest rates, all eyes are on December. The Fed has a meeting here next month, and I think when we look at the notes that the Fed has put out, there's definitely kind of dual, kind of thoughts with regard to where, the membership of the policy committee wants to see interest rates, and it's divided. And so I think, on the one hand, yes, you do have the labor market softening, but you've got this 3% inflation that still just remains sticky. And so, I think there, I would tell producers, farm credit customers that I work with is one, really be cautious with regard to, if the expectation is further rate reductions, I'd be cautious with that because again, part of that dual mandate that needs to be satisfied is to get down to 2%.
All right, well, let's switch up our conversation, shift over to the grain markets, outlook for 2026. Start with corn in particular. Been an interesting year for corn in 2025, and I expect that's probably going to be the case in next year.
It sure has, and we've actually got some data out from USDA as the government reopened. And I think, from the balance sheet, I think, seeing yields right now at 186 is going to put some pressure on the supply side of things. The one number I'm really looking at here that could be an impact for 26-27 is ending stocks. Currently right now the balance sheet as of November was 2.1 billion bushels of ending stocks. That's significant. And if you think about the interplay between corn and soybeans right now, I expect anywhere between 93 to 95 million of corn acres being planted next year. And if you've got a 30-year trend at around 183, 184 with that beginning stocks number taken from last year from ending stocks, you could have an over 18 billion bushel supply number easy on the corn balance sheet. So I think the message I tell farm credit customers is one, there are supply side pressures, but we need to have demand meet or exceed expectations here for 26-27.
The demand picture for corn this past year has been pretty good, all things considered. That has not necessarily been the case on soybeans, certainly the story late in 2025.
That's right. And I think what's looming over the market right now is China, and rightfully so. And you think about that relationship between the U.S. and China. One out of every 4 bushels has been going over to China with regard to U.S. exports of soybeans. And so, I want to be cautiously optimistic. On the one side, it is positive that President Trump and President Xi have talked with regard to maybe getting something worked out from a trade agreement standpoint. But on the flip side, we need to have the administration be consistent with regard to making sure China lives up to those commitments. And what those commitments are is 12 million metric tons here between now and January, and then 25 million metric tons over the next 3 years. And so right now we're at 1 billion metric tons. We have a ways to go.
Well, not to make a bad pun here, but when it comes to soybean exports, a lot of people will say, well, we just need to find new trading partners. It's kind of like trying to turn a cargo ship in the ocean, though. It just can't happen on a dime, right?
That's right. Market access is so key. I think, it's in market access and trade have always been key. The one bright spot, too, is crush on the soybean balance sheet still remains really strong. And so having that domestic, kind of use for that soybean in terms of soybean oil and soybean meal is really important on the soybean balance sheet on the domestic side.
Matt Erickson, Senior Analyst with Terrain, has been our guest as we broadcast here at the NAFB Convention. If you'd like to learn more about Terrain, get some of their analysis, you can visit terrainag.com. farmland.com. Up next here on Market Journal, we're talking about the cattle industry. Joining us, Vice President of Government Affairs for the National Cattlemen's Beef Association, Ethan Lane. Good to see you, sir.
Nice to be with you.
No news in D.C. lately, is there?
Nice and quiet. Yeah, certainly. It's one of those things where you kind of want to be in the news when you're trying to move the needle on something, and every once in a while you end up in the news just because you're on somebody's mind who is a policymaker. And certainly we've been on the president's mind lately. Beef prices are part of that sort of larger effort of the president's to lower consumer prices, and sort of an evolving, I think, education campaign right now about the connection between those consumer prices and what producers make on those animals in the supply chain, and trying to hopefully influence policymakers a little bit about some of the ramifications of what the president's been contemplating, where we are in the market right now. You know, we're in a very different place than the rest of agriculture as far as our market. Producers are just now starting to feel the positive effects of a good market. Several years into a positive market, they've paid down debt, they've bought some new equipment, they've just now gotten to the point where the kitchen table conversation is aspirational, right? And so this came at a poor time. But it certainly is just sort of a function of the larger economy and what we're looking at. But yeah, no shortage of discussions in D.C. on beef at the moment.
A lot of talk about beef imports, particularly from Brazil. What's NCBA policy on those?
So we have asked for years now, through multiple administrations, for the Brazilian access to the U.S. market to be shut down. That is a function of our belief that they are not meeting those same standards for determining and reporting disease outbreaks and getting good information out on what's going on in their supply chain that we adhere to, or that other beef producing nations around the world adhere to. We are a science-based organization and industry, right? We believe in free trade, we believe in science-based trade, but where you have a trading partner that doesn't, say, flag an atypical BSE case for 35 or 40 days or 3 months or 2 years in some cases, where us and everybody else is doing it in 24 or 48 hours, that's not a partner that we feel like should be primary through the door to meet that lean trim need that we're short of in our supply chain. Certainly the same goes as far as frustration with a country like Argentina. We already have a tremendous deficit with them. We have some concerns about their FMD history. Frankly, we've seen a fairly large increase in imports from Brazil over the last year or so. I think we're up 89% or something year over year, up 30-some% from Australia. Part of what we've tried to help the president understand is that if imported trim from these other countries was going to lower consumer prices, that would have happened already. The reality is consumer prices are lowered by consumers when they make those choices at the grocery store. The only cure for high prices is high prices. And we feel like that's got to be the lead there, is that consumer giving us those market signals and allowing those signals to make their way through the supply chain.
A single post on Truth Social can send the futures market limit down in a day. A lot of frustration, as you know, across the countryside about what happened in about a week's time in D.C. Criticism for all cattle groups, not just NCBA, but just saying that there's not a voice that was able to carry the message effectively. What's NCBA's response to that?
So it wasn't just that week. I think you have to zoom
fair.
out and you have to look at 3 or 4 weeks in a row. And this is what we've communicated to the administration, all I think well-intended. This is a communication that communicates through social media, through heightened production values, let's call them. The president likes a show. He likes some intrigue around what he's doing, and he likes his cabinet to sort of tease things out the same way, helping them to understand that Friday big announcements in the cattle industry mean Friday volatility on the boards. And so we saw those limit down days. We saw producers locked out of livestock risk protection. We saw margin calls that producers weren't expecting to make. Not just with those comments, but several weeks earlier, there was the rumors of a herd retention, a heifer retention program that wasn't real. We've had multiple sort of issues like that. And I think a lot of frustration from producers saying, my goodness, we're in a good market, but it doesn't feel that way because I get raked over the coals every week, on some sort of, announcement or some piece of information. As far as who has the president's ear, I think that this is exactly what people should have expected in a populist administration. The president wants to talk to everybody. That includes all the cattle organizations, but it also includes people on the internet, right? I mean, they are very focused on social media. They're very focused on influencers. They've made no secret of that. You know, we would argue that some of those voices on cattle Twitter or social media, most of them, if you look too deeply, they don't even own cattle. So I'm not sure they're the voices any of us would want sort of leading the conversation, right? Doesn't mean that they're not entitled to their opinions. Certainly they are. But, you know, I represent an organization with 44 state affiliates and about 190,000 producers that are inputting into our policy process. I don't claim to have the market cornered on the truth, but I promise you I've got the largest selection of producers that have weighed in and fought that policy out to get to the point where that's what we're presenting to Washington. So when you see 40,000 letters go to Capitol Hill and the White House in frustration about what happened there, that's kind of been part of our message is we can help you with that, right? You have to lean on those industry structures that are doing the hard work to talk to the grassroots and build that consensus about policy positions, or else you're going to find yourself in this kind of situation again.
Well, that's the time we have today. Good news, though, we'll be chatting with you guys coming up early 2026 as part of the Cattle Industry Convention. We look forward to that. Ethan Lane joining us from the National Cattlemen's Beef Association. Up next, now is a great time to look back on the past year, 2025, talk about farmland values, preview what might be ahead in the next year. Joining us, a man in the know, that is Randy Dickut, a farmland analyst with Agricultural Economic Insights. We've made this about once a year appearance here at our convention coverage to chat with you about what's been going on. So across the nation, farmland values, if you can summarize the past year, how would you do so?
Prices for cropland, good cropland, have held pretty steady. There's been, due to timing of reports and surveys, some fluctuation up and down, a few percentage points either way, but I think in general pretty stable for that good cropland. Lower cropland is probably a little more challenge. Regionally there's some differences, but again right now it seems like with ad hoc payments in the past, maybe support, maybe a little better commodity prices, that again there's some stability in land values. Other than we might have expected due to the economic times that crop producers are facing.
How about the number of listings, both on cropland and the pasture ground?
You know, despite the margin squeeze going on in cropland and higher interest rates if you're borrowing to buy a farm, and the kind of the low cap rate or return historically on farmland now, the lower supply for sale generally in most areas has helped support and balance out to the demand, which isn't quite as strong. The bidding isn't as aggressive, it's more cautious. There's some no sales, but there's enough demand from farmers, ranchers, and investors to soak up and be wanting to buy. So that the equilibrium is part of what's keeping the stability in the land market. Crop farmers' working capital, financial well-being is being challenged, some more than others. So will we see a few more lender encouraged or a farmer who's under some stress decide to sell off a farm, and will there be one or two more farms for sale in an area that weren't, and will there still be enough demand?
For our final segment here at the National Association of Farm Broadcasting Convention in Kansas City, ran into a fellow Nebraskan, wanted to catch up with him and his business. That is Mark Stock. He's the co-founder and co-owner of Big Iron. Good to see you, sir.
Hey, good to see you.
Well, you can sell a lot of things on Big Iron today, not just Big Iron, like the name started that way. What all can you sell on your platform?
Well, our bread and butter is still selling farm machinery, but we have a construction component, sell a lot of over-the-road trucks, a lot of farm trucks. We have a livestock division that started about 3 years ago. Pat Cruzy's running that program for us. We have a classic car division, and of course the big thing right now is selling a tremendous amount of farmland, real estate, ranch land.
I want to ask you about some of those values here in a second, but you shared something interesting with me, and this actually started a couple of years ago, but it's the population of farmers retiring, and it's at a historic high right now. What kind of data is behind that?
Well, there's 205 farmers making the decision to retire every day until the end of 2030, USDA stats, right? So we have a lot of people that are going to be exiting agriculture. And of course, that's an exciting time if you're a young agricultural producer, because you'll have a chance to expand your operation by either renting some land or acquiring some land, or maybe even visiting with one of these retirement folks and working out a deal to buy some equipment over time. Because I think a lot of the senior producers that are exiting are giving that some serious consideration. but we do have a tremendous amount of farm machinery sales that are being conducted right now for those folks that are exiting agriculture.
Well, how have those prices, let's start on machinery, been holding up at auction?
Well, you know, we had that artificial fluff from COVID because of supply and demand issues, but we've seen the bottom here in June of this year, and we've seen everything start to escalate from there. And one thing that's very unique this time is the value and the quality of the machinery that's being sold is really, really good. People built buildings when they made money in the last 10 years, so a lot of it's been stored under a roof. People have upgraded their equipment when they made a lot of money because they wanted to beat Uncle Sam and not pay tax, so they bought machinery and 179 depreciated it, and now they're selling it. So there's a tremendous amount of low-houred, very well-kept machinery from these farmers that take pride in their equipment selling on bigiron.com.
There's a lot of nostalgia around farm machinery auctions. Somebody was closing up, all the neighbors would come together, they auction things off. The industry has changed dramatically. You guys obviously a big part of that over the years. How do you try to bring some of that camaraderie back together? I know you have some watch events and in-person things. In fact, I know you share some stories with farmers when they might be hanging up a hat and selling some of their items, right?
Well, one of the things we really like to focus in on is telling that farmer's life story. And the fastest form of media is all of the scrolling people do, right? So we want to produce these videos that tell the story of the family that is retiring, the producer and their family. And you'll see that on our social media channels and on all the social media sites. But that in turn is the thank you that we should all be giving to these people that spent their whole life producing the food, the fiber, and the fuel for agriculture. And so it gets everybody else comfortable with who they are and what they have done and how well their equipment is kept.
Well, I mentioned you guys in the livestock space for a few years now. Livestock prices, how are those holding up on the auction?
Well, you know, we've gone through them rise and valleys. We've got people in Washington need to keep their mouths shut, but at the end of the day, you know, the cattle industry is still a very strong, thriving industry. Calves are still selling well, not near as well as they were. Fat cattle, you know, still a good market for that. In fact, over the summer months, those were the people that were buying a lot of the machinery. Was the people that are selling the calves and the fat animals for record prices. But people are getting used to the new normals. That's what they have to. They have to run their numbers according to whatever their revenue stream produces. There have been people waiting for a correction in all segments, you know, whether it be in the machinery business, whether it be in the land business, whether it be in the livestock business. They've been waiting to grow their operations. And we have such a large watching base on bigiron.com, over 830,000 registered bidders right now that monitor our website weekly. And those people have been waiting for opportunities to expand their operations.
Mark Stock, co-founder, co-owner of Big Iron, joins us. We continue our convention coverage here at the National Association of Farm Broadcasting. Well, that is going to do it for this special edition of Market Journal here from the NAFB convention in Kansas City. Of course, lots of Thanksgiving celebrations have taken place or will soon be happening. So on behalf of our entire Market Journal team, happy Thanksgiving. Hope to see you back here next time. But until then, I'm Bryce Suskit, wishing you a safe and productive week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.